Most people remember the Ottoman Empire for its wars, its sultans, and its eventual collapse. Almost no one talks about its money. That silence is not accidental, because the financial story of the Ottoman Empire is not just history, it is a blueprint for how empires are weakened without invasion, how sovereignty is lost without a single cannon fired, and how debt quietly replaces armies as the most powerful weapon on earth. If you think financial domination is a modern invention, you are already behind. The Ottomans learned this lesson the hard way, and the world learned how to repeat it. Pause for a moment. Ask yourself this question. How does an empire that ruled 3 continents for over 600 years suddenly collapse without being fully conquered? The answer is not military defeat, it is money. At its peak in the 16th century, the Ottoman Empire was the most powerful economic system on the planet. It controlled key trade routes between Europe, Asia, and Africa. Silk, spices, gold, grain, taxes from millions of people. The empire did not depend on foreign lenders. It minted its own currency. It controlled its own taxation, and it operated under a centralized treasury that answered only to the Sultan. This was real sovereignty, and that is exactly why it became a target. Because empires that control their own money are difficult to manipulate. You cannot threaten them easily, you cannot pressure them quietly, and you cannot extract wealth without resistance. So the strategy had to change. Instead of conquest, the weapon became integration. Instead of invasion, the tool became finance. The Ottomans were slowly pulled into a global financial system they did not design, and once that happened, the outcome was inevitable. The first crack appeared in the currency. For centuries, the Ottoman economy relied on the silver aki. It was stable, trusted, widely accepted, but Europe was changing. Massive silver discoveries in the Americas flooded European markets with cheap silver. This caused inflation across the continent, and that inflation did not stop at borders. Silver lost value. The aki weakened, prices rose, soldiers demanded higher wages, officials demanded more pay, the state spent more just to maintain stability. This is how financial pressure begins, not with collapse, with adjustments. The Ottomans responded the only way most states do under stress. They debased the currency. Less silver, same face value. It worked temporarily. It always does. But the trust was damaged, and once trust in money weakens, control follows. By the 18th century, the empire faced a new problem. Europe had industrialized. The Ottomans had not. European goods flooded Ottoman markets, cheaper, mass-produced, highly competitive. Local industries collapsed, imports increased, exports stagnated, and for the first time, the empire ran persistent trade deficits. Money began flowing out. Gold and silver left the treasury. The Ottomans needed cash, and this is where the trap closed. In 1854, during the Crimean War, the Ottoman Empire took its first major foreign loan. This moment changed everything. The loan came from British and French bankers. It was framed as support, as partnership, as modernization. But loans are never neutral. They come with interest, conditions, oversight. The Ottomans borrowed again, and again, and again. Each loan was meant to fix the previous one. Each loan made the empire weaker. Interest payments consumed state revenue. Taxes were raised. Public anger grew, and the lenders became more involved. Not politically, financially, which is far more effective. By 1875, the Ottoman Empire could no longer service its debt. It defaulted. This was not just a financial failure. It was a transfer of sovereignty. Because in 1881, something unprecedented happened. The Ottoman Public Debt Administration was created, a foreign-controlled institution inside Ottoman territory, with authority over Ottoman revenue. This body collected taxes directly, salt taxes, tobacco revenues, customs duties, not for the people, not for the Sultan, for foreign creditors. This was not colonialism in the traditional sense. There were no flags, no governors, no armies marching through the streets. But economically, the empire had been captured. The Ottomans still ruled politically, but financially, they no longer owned themselves. This is the most important lesson of the Ottoman collapse. You can lose an empire without losing power on paper. The Public Debt Administration did not just collect money, it reshaped the economy. Infrastructure projects prioritized creditor repayment. Railways served extraction, not development. Agriculture was reorganized for export, not local stability. The empire became a revenue machine for outsiders, and the people paid the price. Higher taxes, lower services, less autonomy. This created internal unrest. Nationalist movements grew. Trust in the central authority collapsed. And once unity is gone, collapse follows naturally. No invasion required. World War I is often blamed for the final destruction of the Ottoman Empire. But by then, the damage was already done. The empire entered the war financially exhausted, detritus, dependent, fragmented. When it lost, there was nothing left to protect. The territories were divided, borders redrawn, assets redistributed, and the debt, it did not disappear. It was inherited by successor states. The trap continued. Now pause again, because this is where history stops being history and starts becoming pattern. Replace the Ottoman Empire with any modern nation. Replace silver debasement with inflation. Replace foreign loans with IMF programs. Replace debt administration with structural reforms. The language changes, the mechanism does not. Debt creates dependency. Dependency removes sovereignty. Control shifts quietly, and the public never sees it coming, because no one calls it conquest. The Ottoman Empire did not fall because it was weak. It fell because it was financially absorbed. It lost control of its money, then its revenue, then its decisions. Military defeat was just the final formality. And this is why modern financial systems study the Ottomans closely, not as a failure, but as a case study. Most people are taught that power comes from armies and borders. The Ottoman Empire proves something else. Power comes from controlling money, and once that control is gone, everything else is temporary. The flags, the titles, the governments, they remain, but the decisions are made elsewhere, quietly, calmly, through balance sheets. This is not ancient history. This is ongoing reality. If this video woke you up, drop a like and subscribe. New forbidden truth every single day. Turn on notifications, the next one might save your wealth. Comment the one thing you're doing right now to prepare. I read every single one.